Good evening, friends. This is time for the trade wrap of 9th of March 2021. Now, let's have a quick look on the S&P 500, and before that, let's look at the Nasdaq, which had a rough day yesterday, but today seems to have opened with a gap up and above previous two sessions highs. So you can safely say that the Nasdaq has bottomed out. If you look at the S&P 500, again S&P 500 has crossed yesterday's high point. So you can say that global markets have bottomed out. And why is that? The reason is that the US 10-year bond yield has started to fall. Now, whether it's a temporary fall or a permanent fall, we'll know. But that has led to a global rally, which is likely to extend to India. In fact, it already started in the last hour today. So before moving further, let me request you to like, share, subscribe the channel, and for individual advice, you should join in the join button services, platinum, gold, silver, diamond, copper, etc., and get advice like the one we have given today at let me just refresh it. This was posted at 10 hours ago. So about, you can say, 12 o'clock, we had said bond yields cool off, commodity moderating. This could set up a financials rally. And below that, we gave swing calls on Axis Bank, Kotak, HDFC, Bajaj Finance, etc. And this cooling off of bond yields has led to a global rally, including the one that you can see on S&P 500. So the best trades sometimes are based on insight more than an X level or a Y level. So this sort of insight ahead of time uh, is offered in these join button services. WhatsApp 98710 or email ashwani_gujral@yahoo.com, or straight away go to the YouTube channel and use the join button and get uh, choose the plan that suits you, and it would be useful because basically we have caught the bottom of quote unquote bank nifty and possibly even the nifty today by giving all these heavyweights. From here, I won't be surprised if you see new highs, A, and let's try to see what could we do beyond the new highs. So this is a chart of the Nifty. Let's look at the hourly chart on the Nifty, where you can see this trend line here is at 15,250, and what you can see here is some sort of a head and shoulder pattern. So tomorrow, if we get past this 15,250, the target of this pattern could be 16,000 plus. So somewhere, this consolidation has, in our opinion, ended, and we should now head on the upside. If you look at the option chain analysis, 15,100 calls had about 64,000 OI on a cumulative basis, and by the time we closed, I think 23,000 of those calls had already been covered. So there is clear call covering which is happening at about 15,100, and that also is another proof that uh, the markets are now heading higher, and a lot of it will be through short covering. Now, how do you enter? Given the sort of large volatility we've seen, I would propose that this shaded area is the Donchian channel, and it will start to move up in this manner, and the 20 period average will move with these channels. So if post this 11 15 250 type of area, we correct back to the 20 and then we give you some kind of breakout, I think that would be the right way to enter. At some point you will get to see on a 15-minute chart the market retracing to the 20 period average. So that would be the point to enter. Why I'm insisting on this is that look at these large swings. The market is tending to have fairly large swings on both sides. So if you try to chase this thing here at 15,250, it is possible that you have a excursion against you towards 15,180 thereabouts. So to prevent that sort of pain, I would think that it will be useful to wait for a pullback. On Bank Nifty, we have been talking about a coiling of the Bank Nifty, where the Bank Nifty has coiled into this pattern, and my sense is that tomorrow we could cross beyond this trend line. The coil starts to expand on the upside. So that way, uh, both on Nifty and Bank Nifty, you could be starting uptrends which take you to new highs. Again, very similar entry plan you need to have. Wait for the Bank Nifty to retrace towards a 15-minute 20 period average like you retrace out here. So wait for this kind of a retracement and then enter. Tomorrow is expiry and you will have a lot of flat period. So use that flat period for a entry, and that will be useful. Again, the issue here is these large swings. To tame the volatility, you have to wait for the market to come towards you so that you can have an entry. And basically 36,400, once that's crossed, you should have a fairly decent upside. You have supports around 35.50. On the Nifty, 15,100 is now a fairly safe support to hold on to. FII buying, we see 2,000 crores thereabouts were bought today. If your FII buying is resuming, all kinds of FII favorite stocks like large cap techs, private financials, etc., should be expected to do well. And if bond yields are coming down, that has a good impact on financials in general. So the private financial correction may also be over. So that should be it for the moment. I think it's very clear that a breakout is imminent, and that is what people should be looking for trade. Let me just show you what is going on the 36,000 call of Bank Nifty, where again you had about 60,000 odd calls written, and you can see from 60 plus thousand, it is now down to 46. The change in open interest is minus 20,000 on the Bank Nifty. So these were positions which were closed, and again at 35,500 there is lots of addition of open interest. So the idea here is that now the same call writing which was stopping the market is going to help it push higher. That should be it for right now. Take care, trade well, and please consult your financial advisor.